Hey Matteo, my name is Rhea. I just started working after finishing my articles. I'm finally earning a decent salary, but honestly, I'm not sure what to do with it. I've made some dodgy decisions in the past, taking out loans I didn't fully understand, missing payments, that kind of thing. I really want to do better this time, build something solid. But where do I even start?
Welcome back to Everything Counts, the podcast that helps you make smarter choices with your money, because when it comes to your future, everything really does count. Now, in our last episode, we spoke about the dangers of accessing too much credit too soon. Well, today we're shifting gears. If you're a young professional trying to make better financial decisions and build long-term wealth, this episode is for you. Joining me again are Keshnie July, lending product owner at Investec, and Lehlogonolo Ramushu from Investec's credit risk team. Welcome back to Everything Counts. Let's talk about bouncing back from those money mistakes, right? Young professionals like Rhea are trying to recover from missed payments, overextending themselves financially from the credit they took out. Is there hope, and how can you start rebuilding before you get into making that wealth?
It starts with financial awareness. If you've defaulted or struggled to manage debt, your credit score may have been impacted, but it's not irreversible. Start by reviewing your credit report, understand your current obligations, which accounts you're falling short on, and work towards building a better payment track record again. Consistency is key here. Paying every month on time will get you back on track. Prioritize essentials and cut back on luxuries. Very important, ask for help. You have your bank or your banker available to help.
Exactly. And it's one of those things, right? You just need to take the first step. So take it one step at a time. Start with the small things. So, for example, if you were the kind of person that missed payments on their accounts or on their credit cards, start with that. Ask yourself, how do I get myself to a position where I can actually afford to make the payments that I have to make on a monthly basis? Once you've gotten into the habit of actually paying that off, if there are some credit cards that you're like, I actually want to squash this, I don't want to see this ever again, ask yourself, how do you get there? What do you have to pay on a monthly basis to get to a point where after a year, that thing is fully paid off and you can go and close it? So it's just sitting back and taking the first step and asking yourself, how do I get myself to the position where I actually want to be in versus where I'm currently at? And just build those habits to say, if I was okay with not paying this thing off and I'd get calls and I'd get reminders and I ignored that, get yourself to a position where you face it and you say, actually, if there's a problem, let's fix it rather than run away from it. And like Keshnie said, ask for help. Ask yourself, what resources do I have available? Sometimes you don't even utilize those resources, but you're paying for them. Ask yourself, what do I have available to me to help me get to point B?
I think I've made some of those mistakes, right? Taking out clothing accounts because you now go to work. You need to look good every day when you go to work and be presentable. So you take on clothing accounts, and during the weekend, you want to be with your friends and look like you're working. So you're buying all sorts of jeans on credit. But when you start repaying those amounts, you realize just how much you've taken out, and it's taken away from your day-to-day expenses as well. So what type of mistakes have you made, Lehlogonolo, as somebody going into the working world?
For me personally, the biggest mistake I made was not budgeting. So I got to a point where I was just winging it. So every month, I didn't know how much my groceries were. I didn't know how much I spent on petrol. And because of that, everything came as a surprise at the end of the month. So it's very important to understand your own expenses and actually track them. Also, banking apps are becoming very helpful in that sense. So some of them do actually track how much you're spending on food. And after 3 or 6 months, they get to a point where they're like, okay, this is your summary.
Yeah.
And this is how much you actually spend on this and this and this. And based on that, you can get to a point where you're like, actually, I'm spending too much on clothes, or I'm spending too much on something else. If my banking app says I spend 4,000 on petrol, then I can't go make a budget and say I'm going to spend 1,000 rand on petrol. So you have to be very realistic with it. And once you've gotten to that point, then you can start having the conversations of how much can I save on a monthly basis.
Let's talk about what a young professional should be asking themselves before even taking out new debt.
I think the biggest question is, do you need this? Do I need the expensive car, or do I just need a car to get by? So understand the difference between what you need and what you want. Focus more on your needs and then maybe have a small budget for your wants. But also ask yourself, do I have enough post paying for these things to actually still live comfortably? So you don't want to be in a position where you have 80% of your salary going towards debt repayments, because after that, there's still electricity, food, and all these other expenses that you normally don't provide for upfront. But also ask yourself, is this debt helping me grow? Or is it just convenience? By grow, we mean, is it helping you and the bigger picture and your long-term wealth? What is it adding to your life? Or is it just something that is going to take up a lot of your salary now? And ask yourself, again, reiterating this, do I understand all the costs? Do I understand all the terms of this thing that I'm taking out? Am I happy with the interest rate? Am I happy with the fees? Am I happy that all of this has been explained and I really understand it and I'm comfortable with it?
Keshnie, there's a lot of honesty that comes with that, right? Sitting with yourself and getting the
Absolutely.
hard answers, maybe even figuring out you might need a little bit of help. So how do you deal with your financial management at the time when all the questions come up with wrong answers and you see that you've found yourself in a very tough situation?
I think it's really important to ask for help. It can be very overwhelming and stressful having people call you for money because you're late on payment or you've been late on payment a few months in a row. The bank is there to help you and to give you support on your financial journey. It doesn't matter what that looks like. And I think when you're in that position, you don't think about asking for help. But that's what the bank is there for. There's options available to you that you can take up. I think there is a level of personal responsibility. I know we chatted about it when we opened the previous podcast. You have to take responsibility for the financial decisions you made. So you have to be willing to make sacrifices to bounce back. Ask yourself, am I living within my means? What is my long-term financial goals look like? There's a level of instant gratification. This looks amazing. I also want it. Let me go for it. Then it snowballs. This ease to credit, especially store credit, buy now, pay later, can snowball very quickly. I think it's really important to make sure that you're conscious, like you make these financial decisions very consciously and not from an impulsive place. But it's all not lost. You can come back from a bad financial position, whether you're in debt, in default. It's all around discipline and knowing where you've gone wrong by looking at your credit report, where you need to focus, where you need to get the consistency.
Just to add to that, you also have to be willing to listen. So if you apply for a car and you want a R1 million car and the bank tells you your max is 700,000, it's important for you to listen, because for a bank to get to that decision, they would have done an affordability assessment. They also have taken a lot of things into account to get to that decision. So you have to be very willing to listen to feedback. And if the bank is helping, take it. Understand that you don't know it all and that there is something that you might be missing or things that you're not accounting for. So take the feedback and don't just work with the mindset that actually if somebody else is going to give it to me, then I'll take that.
Keshnie, it's also good then to have years where you just take stock. So instead of planning these big purchases, your year could just be just getting rid of the debt, and that's what you focus on.
Absolutely. And sometimes it could take more than just a year, right? It may take a couple of years to recover, but it's the discipline that will get you there, the consistency that will get you there. It is also a very stressful time being under that kind of financial pressure and having people phoning, So I think there's a well-being element that you also owe it to yourself to have the discipline so that you can come full circle and be conscious of the decisions you take, get help where you need it, and then put yourself on a good standing for future credit, for future financial goals that you want to achieve, and that big, beautiful house that maybe you want to own one day.
We're getting essential insights from our experts on how to get out of debt and start building some wealth. We'll take a quick break and have more after this.
With the right partner, wealth becomes something you grow into. With Investec Private Banking, finance your new, used or pre-owned vehicle at up to prime minus 1%. And as a first-time homebuyer, get 100% home loan finance. All transfer fees are included, plus up to 5,000 Rand for miscellaneous attorney costs. Subject to credit approval. Now that's private banking.
Welcome back. Let's pick up where we left off then. Let's say someone has now stabilized their debt. What's next for them? What products, what strategies should they be looking at in order to start building that long-term wealth?
I think it's really important to save, and I think that thread has come through our conversation. And ideally, you should save between 3 to 6 months of emergency savings that you can have access to. I know it sounds daunting when you say 3 to 6 months of savings, but it really does buffer you against any life mishaps. And over and above that, there's an element around wealth creation that could look at you building a portfolio of properties, and that's the next step for a young professional. There's also the considerations around like your tax-free savings account. Instead of having that money in your check account, you could actually put it into a tax-free savings. You can have endowments, you can have money market funds. These are all ways and means to save, right? But I think it's really important to start somewhere. I know the 3 to 6 months sounds daunting.
Look, when I first
Start
heard about
small.
that, I was like, life can't be that bad. I'm sure 1 or 2 months should be fine, but anything can happen, and you don't want to find yourself, especially as a person coming out of debt, having to go and look for debt again in order to cover that 3 to 6 months. So that emergency fund, quite important.
Absolutely. And let's be honest and practical. We live in a country where you never know when you, for whatever reason, not be able to work. And you have this buffer that can sustain you. You also have this nest egg in a way that can help you fund a new business. The possibilities are endless in terms of what you can do with this money that you saved. And you own a strong foothold because you can just keep growing that wealth once you have a good base.
Lehlogonolo, then building wealth can also be small steps, because once people hear the word wealth, they think they're putting away 20,000 Rand a month.
It really starts with the small things. Just start saving. There are people that actually don't have any savings at all. So never mind the 3 to 6 months emergency fund. Some people don't have savings at all. So going back to the budget, if you've set out a number for something and you've gotten to a point where you've maxed it out, then that should be your hold on point and be like, okay, I've maxed it out. So if I want this thing and I really do want it, I'll get it next month. It will form part of next month's expenses, versus overlapping and deciding, oh, actually, there's an emergency fund that I have. So let me use that rather, because it eats up into that. And when the actual emergency comes in, you don't have enough of it. And there's small things that people overlook. For example, if you're buying things in bulk, if you know that, you know what, I don't have the discipline to say when my salary comes in, I'm going to take a portion of it and put it into savings account, then automate it. Have a debit order in place to go towards your savings. A lot of these things all come down to understanding and knowing yourself and getting yourself to a position where you're saying, okay, if I'm this kind of person, what measures can I put in place to get myself to where I actually want to be? And again, speak to your bank, find out about all these products. If you know that you always tap into your savings, look into fixed deposits, notice deposit accounts, understand all these things and use what works for you.
Keshnie, your practical steps for those young professionals starting out on their wealth journey now.
I think Lola summarized it nicely. It's really about tracking your spend, making sure you prioritize savings. In addition, I think it's important to pay your commitments, right? Like a home loan, a vehicle. Paying an extra few $100 will go a long way in paying off that debt quickly. I think we underestimate what a few $100 can do on a 20-year home loan if you pay that consistently. So if you want to be front-footed and create wealth, that is some of the things you can do, is pay a few $100 into your vehicle, a few $100 into your home loan. Over and above, of course, creating that savings, emergency
so above
savings.
the amount that you're paying every month, you just add on 100 Rand, 150 Rand.
I think it all goes back to all the things we were taught, even as early as in high school, when we were taught about making smart goals. And they have to be specific, measurable, attainable, time, yes, and all of that. So go back to the basics. Give yourself time frames to say, I want to have this amount in savings by this time. And that is very realistic. And then you put a plan in place to get yourself to that position. And another important thing that I think we need to touch on is that just as you can negotiate interest rates when you buy a car or a house, you can also compare interest rates for savings. If you're getting 10 rands more a month from the savings, that does accumulate and it makes a difference in the long run.
Well, you heard it from our experts. It's not about being perfect. It's about being prepared. Thank you again to Keshnie and Lehlogonolo for joining us here on Everything Counts. Whether you're just starting out or looking to reset your money mindset, keep making decisions that count. You're not just building a bank balance, you're also building a future. Until next time, I'm Motheo Khoaripe, and this is Everything Counts.
The views expressed are those of the contributors at the time of publication and do not necessarily represent the views of the firm and should not be taken as advice or recommendations. Investec Private Banking, a division of Investec Bank Limited, a registered credit provider committed to the Code of Banking Practice as regulated by the National Financial Ombudsman.